the best investment method for people working in stable jobs or business. Okay, let me put it this way. Over the years, I've seen people with such scenario. The more boring, stable, predictable a person, day job or business is, the more likely he's going to be investing aggressively, provided he or she has gained enough knowledge and confidence to do so. Now, this can be explained, called my version of the traditional barbell investment strategy. I call it CF Lieu Barbell Life Strategy. Now, picture that all your money that you earn and is represented by a barbell, one side of the barbell, and equipment used in weight training, bodybuilding, and weightlifting. Two big lumps separated by a narrow bar. On one side, there's a basket of money in saving or fixed deposit coming from a very stable job or business generating predictable cash flow every month. On the other side, the balance. To balance up the entire barbell, you have a basket of extremely risky, speculative money placed, usually in the form of investment. The weight is distributed between two extremes with almost nothing in the middle. Now, the inverse is also true actually. Usually for a business person who has to manage the many uncertainties inherent in the business itself, especially financially, then a business person tend to prefer a more conservative type of investment with two main factors in mind. Guarantee and highly certain or consistent cash flow in the form of dividends or coupons, and if possible comes with capital preservation. Now, here's what it look like. Now, let's say a black swan event comes along and wipes out your stocks portfolio or whatever investment portfolio overnight. The very worst case scenario that you can take, you would take a haircut of like 20% of your wealth gone, but it wouldn't change your quality of life one iota. Why? Because you still have your income coming in from your business or job. On the other hand, you also need to be practical and accept the fact that even if your investment portfolio shoots up 50% overnight, that's not going to make you 50% richer overnight either, because your investment portfolio only forms 20% of your accumulated wealth. Nonetheless, it gives you a peace of mind. Yes? Now, the interesting thing is the worst position to be in is actually being hyper conservative or hyper aggressive on both sides. Now, first scenario, being hyper conservative on both sides. Say you work as just insert your idea of a very stable income job or business here, and at the same time you hold all your cash reserve in your fixed deposit, your cash, your saving and current account. You don't like to put your money elsewhere, like in the stock market or properties and whatnot, because it pains you to see your money value go down. You hate it even when your investment is down by 1%. But the thing is, there's a massive downside risk in keeping most of your money in cash. Now, it's just less obvious. I think you know what inflation is, and I don't need you to nag you on that. Or you might be a bit more daring and dabble in stocks, but you only park everything in the blue chip counters. Well, there's nothing wrong there, but there's almost no chance a mature, publicly listed company, blue chip, is going to skyrocket in value or price, right, in short term. So you end up with being neither here nor there. By contrast, if you invest in regulated, let's say, private equity investment, some people will call it venture capital, the likes of, let's say, Uber, Airbnb and all that, a successful venture capital exit, let's say if you're invested in something of this nature, in the realm of maybe 10 times or 100 times the original investment, it is possible to get that kind of return. Now, often this sort of moonshot investment are often difficult to access, and they don't have the same disclosure obligation. That means there are actually a lot of opportunity to be found which haven't been priced yet in the market. Now, even if this kind of investment fail, right, a VC or private equity investment, now you are still safe because your livelihood isn't really jeopardized. Now, another way of looking at this is to invest in yourself. You might put like 10 or 20% of your savings towards upskilling yourself or starting a side business using perhaps your already possessed high income skill. Now, if the side business does happen to pay off, now the returns will be huge, thereby replacing your main job, which you probably don't like that much, but too bad, it pays very well. Now, just think of this. What are the things, just imagine on the positive side, right? Look at things. If you start something like a side business, using your high income skill and whatnot, and it turns out exactly the way you want it to be. How would your life look like? Don't you feel the excitement? We always need some excitement in our life every now and then. Yes. Now, on the second scenario, being hyper aggressive on both sides. So, say you're a business owner dealing with palm oil, and it's a commodity, it's palm oil, because your profit for your business is determined by CPO prices, which you can't really control. Sometimes you profit more, sometimes less, sometimes you may be at a loss. Now, you think that you still want to invest in any commodity related stocks because you know that well? I don't think so. Or maybe you want to dabble in Forex and Bitcoin? Well, I don't think so. If both your business and your investment goes down the drain at the same time, now you lose your shirt, you could go bankrupt. So logically, you don't want to do that. Of course not. It's uncertain enough to manage the business profitability, and you don't want this extra excitement or uncertainty in your investment. So what you want to do is this: not to dabble in things in cryptocurrency, forex, or speculative investing, like doing stocks day trading, forex trading. You want to keep it simple. If you have a job or business which is relatively uncertain, so you want to keep it simple. How? You want to buy and own a stake in one example is a public listed company in this one niche sector called REITs, REIT, Real Estate Investment Trust, in Bursa Malaysia or any stock market. It's simple because all the underlying assets of any REITs are basically brick and mortar commercial real estate properties utilized for business activities. Now let's talk about the expected return. Now, is 6, 7 or 8% annual dividends good enough for you? Yep, you get that kind of positive return from REITs regardless of any economic or market condition. Now, if your answer is yes, then you might want to learn why even private bankers and banks branch managers from top Malaysian banks are listening to me for the entire day to learn about how to advise their clients to potentially reap the benefits of REIT investment. REIT, REIT investment. Explore how you could reap the benefits of highly predictable investment dividend from property-backed assets, minus the usual hassle and headache that comes with the traditional way of investing directly in real estate property. You definitely want to check out the link below this video. Now, the thing is, the only way, this is one of the safest investment ever, beating, in terms of getting twice or even triple the rate of return from your fixed deposit, but yet it's safe enough because the only way a REIT sector could get wiped out entirely would be some event that literally destroy every single business on earth. By which point we will probably back to Stone Age and investment would be the last thing on our mind. Anyway, this also explains why investment profiling, okay, before you invest, you fill out some forms, say whether you're conservative, balanced, or aggressive risk profile. This kind of investment profiling actually it's additional paperwork which is mostly BS, because people might consider themselves as aggressive, but then when they fill up the form, their mind is only thinking about their business, because they know their business, they can be aggressive in their business because that only apply in their business. Because when they think of this mindset, if they're aggressive in the business, they should be conservative in their investment instead. So that's the thing. You wonder why people got themselves as aggressive investment risk profile, and they panic when their portfolio drop 2%. Okay, don't laugh, that happens. So yeah, consider the barbell, CF Lieu barbell life method for it's a mental model to apply in many aspects of life by controlling the risk of bad outcomes and increasing the chances of a good outcomes. You don't need to worry about making any specific prediction about what's going to happen in the future. So with that being said, you like this video, feel this informative, so do click and subscribe to CF Lieu channel here, wherever, below or above this video, and I'll see you in the next lesson.